Volatility has returned to the US stock market. Wall Street attempted to recover on Friday from steep losses but left the US benchmark indices with their biggest weekly losses since late March. All this and more in our weekly financial review on InstaTV. The S&P 500 index added 1.3% to end at 3,041.31, a day after dropping by nearly 6% in its biggest rout since mid-March. For the week, the S&P fell by 4.8%, snapping a three-week winning streak for the benchmark index. And this interrupted what had been a dramatic rally for the stock market, as a rise in COVID-19 cases in the US and a somber economic outlook from the head of the Federal Reserve dashed investors' optimism that the economy will recover relatively quickly. Meanwhile, the Dow Jones Industrial Average rose by 1.9% on Friday, ending the week with a 5.6% loss at 25,605.54 after plunging by nearly 7% on Thursday. The risk markets got a huge boost in the prior week with the reopening of the US economy and a better-than-expected jobs report. However, many investors realized that the timing of the recovery may not be as optimistic as they thought. The NASDAQ composite, which posted 3 straight days of all-time closing highs and saw its sharpest one-day drop since March 16 on Thursday, gained 1% on Friday to end at 9,588.81. For the week, it was off by 2.33%. Meanwhile, starting this week, some news served to soothe investors' concerns. The Federal Reserve finally launched its highly anticipated Main Street lending program, which is designed to help banks lend to small and medium-sized businesses hurt by the pandemic. The Fed also announced it will begin purchases of individual corporate bonds. So which stocks were in focus last week? American Airlines shares surged on Friday after the company said its demand trends and cash burn trajectory have improved. Shares of the U.S. airline giant stock soared by 16.4% on Friday to close at 16.74. For the week, however, the stock posted a 9.9% fall. American Airlines stock was on the move on Friday after the airline disclosed that its load factor improved in the first 8 days of June relative to May. Management also said that net bookings have been positive since mid-May in both last-minute purchases and bookings for traveling months from now. Most importantly, the company noted that cash burn was on track to moderate to $40 million per day in June, compared to its original estimate of $50 million per day for the final month of the quarter. That's a significant improvement. Meanwhile, among losers, Tesla shares fell by nearly 4% on Friday after a pair of downgrades 2 days after touching a fresh all-time high. Morgan Stanley turned bearish on Tesla shares on Friday, downgrading them to underweight from equal weight on concerns about US-China dynamics as well as recent price cuts. Goldman Sachs also downgraded Tesla's stock on Friday, moving to a neutral rating on the name. The Tesla stock fell by 3.8% on Friday to end at 935.28. For the week, it still notched a 5.6% gain. You've watched Weekly Financial Review on InstaTV with me, Anna Kasatkina. See you back soon.